business demerger for HUL. But Snehi, stay on with us. Let's also talk about Honasa Consumer. You know, it was a good quarter for mamaearth's parent company. Most of the metrics did beat street estimates, barring revenue, which was in line. So why don't you do all the number crunching for us and tell us what the brokerages are penciling in for the company post the earnings?
Well, absolutely. Another good quarter coming in for Honasa Consumer. If you take a look at what their scorecard looks like, revenue is in line with our estimates, but it's a beat coming in on the PAT, EBITDA as well as EBITDA margin. On a consolidated year-on-year basis, revenue has come in at 595 crores, which is up 7.4% year-on-year, in line with our estimates. Net profit has come in at 41.3 crores, up 2.8%, but still a beat versus our estimates. EBITDA has come in at 45.8 crore, which is a downtick of almost 1.5%, but still much better than what we were expecting. There's been a contraction on the margin front at 7.7% compared to 8.4%, but we were expecting just a 5.4% number here, so still much better versus our estimates. On a sequential basis too, they have done very well, and in fact sequentially the margins have expanded quite sharply at 7.7% compared to 5.1% last quarter. If you take a look at the earnings fine print, their underlying volume growth this time is slightly concerning. It's coming at 10.5%, which if you compare on a sequential basis was at 21.2%. So sharp cut has come in their volume. But focus categories like face wash, shampoo, face serum, they've all seen double-digit growth year on year. They've seen 100% growth in face cleansers. Sequential market share gain has happened of 45 bips in all these product categories. Their modern trade as well as their offline retail distribution channels are both up 20% on a year-on-year basis. The direct distribution strategy is driving a 50% year-on-year increase in the direct outlets that have been building in Q1. So that strategy change that they undertook last year seems to be working for them very well. If you take a look at what the brokerages are making of these earnings, Jefferies has maintained its buy rating, target price of 400 rupees per share. Goldman Sachs has maintained its neutral rating with a target price hike to 295 from 275 earlier, and lastly JP Morgan has maintained underweight, but the target price has been hiked to 235 from 197. So that's the take on Honasa Consumer. Revenue in line, but all other estimates beat versus our estimates.
Quarter coming in for Honasa Consumer. Snehi, thanks so much for joining us with all those details.